Just a quick one before we get started here. If you guys are looking to get funded, I'd highly recommend Funding Engineer. I've traded with them many times before and I found them to be the most trustworthy company to work with. They have 4 leading industry challenges here as we speak, and if you do want to support me, please do click the link in my bio and my description to sign up so I can continue giving away to you guys. You will also be entered into a bi-weekly giveaway when you sign up through that link. So that being said, we'll head back to the video. What is up everybody, and welcome to a brand new YouTube video, where in this one today we're going over an ICT based top-down analysis approach to the market and how you can use the higher timeframes and the lower timeframes to be able to build a bias to give you the best chance of winning in this industry. So first of all, I want to talk about a top-down approach in terms of moving down timeframes and then everything aligning within these timeframes. So let's start on this AUD USD chart, where you can see, first of all, I want to mark out my extreme range high to extreme range low, which if you look here, which is the dominant price swing. The dominant price swing for me is from here all the way down to where we reversed. So we take our range here, and then obviously we use this for premium and discount. Now we want to be sellers above the 50% level of this range, as that's considered a premium, and we want to be buyers below 50% of this range, as that is considered a discount. Now what I saw in here recently, if I get rid of them annotations, what I saw in here, if we move up to the weekly chart, you can see inside this price leg down, which is our daily dominant swing, inside this price leg down, you can see we have multiple premium arrays. Now I saw a rebalance redelivered price range inside here, which price did tap into, and we had a fair value gap around this area. You can see price came to this rebalance redelivered, which for any of you who don't know, just brief explanation, where we trade down, deliver sell side, deliver buy side, and then deliver sell side again. This becomes your rebalance redelivered range. So you can see we have our PD array, which is also inside these 3 down close candles from here up to here. This all counts as a bearish order block. Now going down into the daily, you see we started to reject this level multiple times, and if you take your fib and then split the PD array in half, you can see that we wicked into 50%. On the second day, we just came below it and then traded down. And then the third day, we wicked above 50%, and look where we closed again. Now, these are strong rejections from our PD array. So if we look at the correlating asset now, because we always want to look for SMT between the 2 correlated pairs. If we head over to NZD/USD, you can see between these highs, NZD/USD actually made a higher high. If we go over to AUD/USD, you can see high and then a lower high instead of that higher high that was made on NZD/USD. You can see this is the lower high. On NZD on Wednesday, the 22nd of May, you can see we actually did take the high. So that means we have an SMT divergence, and the pair that makes the lower high is actually the weaker pair. So let's go over our checklist again for this top-down approach. We've gone from the weekly and we traded into a weekly PD array of this price swing. Now mark out our daily dominant price swing, so the biggest swing you can see on your screen really, and measure our premium and discount. Now that grey box, or that rebalance redelivered on the weekly chart, as you can see here, is our PD array, is our premium array. Now we check for SMT and you can see we've had a lower high. So let's drop down time frame and try frame something on this time frame. So what happens inside here when we make this SMT? You can see on the 4 hour we gather more information by dropping down. What happens? We have a failure swing, which is showing initial weakness as we reject away from this order block, and then look what happens. This low was the low that was created before we had this swing up. Look what happens. We break below the low. Now I often like to see a bit more displacement than this, where we went down, down, lagged about, and then down. I wanted to see something like this. That is what I would have liked to seen ideally. But either way, we did still break structure, and we had two really strong days downwards and then another one to finish it off and get below the actual low. So we have broken market structure on the 4 hour. Remember, we're going from our weekly to the daily and then to the 4 hour. You can see we broke structure, and then where do we trade to? Take your eyes inside here, we have a premium fair value gap. How do we know it's a premium on a 4 hour? Well, if we take our range, you can see from this high down to this low, the one that broke market structure, you see this is above equilibrium, so this counts as our premium array. We then want to drop down to the 1 hour for even more confirmation, and look where we open up on the day. Now remember, this is a full top-down approach. You can build a model around this, from using the different time frames and then waiting for something to happen or the framework to build that coincides with its parent time frame. Okay, so like the 4 hour and the daily, or the 1 hour and the daily even. If the 1 hour structure breaks from a daily level, that's just extra confluence and the key to this top-down analysis approach. Now, Midnight New York is our opening price. We use this for overbought and oversold conditions. Now, this is also a dynamic premium and discount sort of thing. So you can see we're in a dynamic premium. When we rally up above New York midnight price, we drop and then create what? A simple fair value gap, 3 candle pattern after breaking another low and a low inside here. So this gives our displacement. You can see this fair value gap holds up. Let's say you miss this fair value gap, we get another leg down, trade into it, and then run away. Now this is what me and my Discord profited on today, and during New York we saw this displacement happening, and I'll show you on the 15 minute where we saw it happening, and we capitalized on it. I took sales from here with my stop loss above this high, and then rode it all the way down to this premium level, a discount level, sorry, equilibrium of our daily price swing. So now dropping down into the 15 minute, this is really your intraday chart. So often I suggest to new students not to go lower than the 15 minute chart, as it gives everything you need. And then when you start getting into the 5 minute, or the 5 minutes okay, but when you start getting into the 1 minute, this is just too much information and there's too many things that can happen on it. Whereas the 15 minute is really clean for an intraday chart. It's clear what's happening. When you get displacement on it, we know what fair value gaps to look at, okay? So we had displacement from the London session swing, came up to a premium again, sold off, and that was enough displacement for me where I wanted to scout for sales, especially the time we were at. You can see New York session opened up at 7 a.m. for Forex, and then it closes at 10 a.m. So this is our kill zone, and you can see we dropped down, traded into and above an old high which previously tapped an imbalance. There's some nice buy stops triggered in there, and some people who have been trailing their stop losses as we come down, when they saw this candle, their stop loss would have been above this high. We run that out and then continue lower. I took sales from this fair value gap, and it was a really nice move. We really dropped in PM session especially, and traded into equilibrium of the daily price swing. Now all you need is displacement. So things like this, as soon as we get a drop like this on a 15 minute, now you have your entry. We trade back into it 9:30 or 9:15 New York time, which is prime New York session. Okay, that's when a lot of your setups will form, especially if you're on the 15 minute looking for entries. So that pretty much concludes my top-down analysis approach, and I wanted to point out how we make all the timeframes align, and how fair value gaps, for example, on a 1 hour often look nicer on a 15 minute, and we have that clean displacement on a 15 minute. Then the 4 hour is a nice sort of intraday chart to look for premium and discount on. Oftentimes you'll see when we come into a nice 4 hour premium, there's going to be an intraday swing which happens on a 15 minute, and it's going to be a really energetic move. like this one, for example, today. You can see really easy, short-term highs tagged, and we keep dropping lower. So, like I said, that brings us to the end of the video. If you did enjoy, please do drop a like and a comment. I will be back in the next one explaining some new ICT concepts and different things based around that. If you do enjoy my content, please do join the Telegram and check out my Twitter below. As always, thank you for watching, and I will see you in the next one.